hardship. And all of your creditors can increase your interest rates at any time if you're ever late on any of your other accounts. So if you have a JCPenney's, Macy's, and let's say Home Depot, and you are late on your JCPenney's, Macy's and Home Depot have the right to increase your rate and you have no say on it. Okay, that's why it's so important to pay on time and before time. Now, let's get into what is a credit score. Basically that 3-digit number is a numerical expression based on the stats of a person's credit file to represent whether they're credit worthy or not, and how much of a rate that you'll get and how much credit that you'll get. Credit scoring is not limited to banks, but other companies or other groups such as mobile phone companies, insurance companies, landlords, any sort of government department may use this same technique of using your score to determine whether they want to extend anything to you. But how does that score come about? This May would be 22 years that I would be in the finance and mortgage industry. And when I was doing mortgages full time and I would pull someone's, tri-merge report to get their scores, I didn't even know how the score was derived. I just, put in the person's information and boom, here's the report. That's the score. And that's what we went with because our industry didn't teach us. Okay. Your score is determined by 5 factors. First and most important, 35% of your score is your payment history, paying on time. 30% is your balance versus your limit, so how much you owe. 15% is your length of credit history. 10% are types of credit, and the last 10% would be new credit or credit inquiries. Now, what's not considered in your credit score is your housing status, whether you rent or own. Your income, your length of time on your current job, your length of time at your current address, or any previous denial of credit. But your credit score can affect you on the interest rate that you do pay on credit cards and loans, your ability to get a checking account, rates on your auto insurance and other insurances, whether you are employable or promotable, and what you pay on your utilities. And I've learned in some subdivisions in Georgia what you pay on your garbage pickup. That's horrible. Okay, but it's so true. Now, people often ask me, well, how do inquiries count? Now, we know that they're 10% of our score, okay, but there's 2 different types. There's a hard inquiry, and that's only for permissible use. That's when an inquiry will count against you when you've applied for something. Okay, like a credit card or a store card or something like that. A soft inquiry is when you pull your credit report yourself or from a consumer site, or a marketing inquiry would also fall in this category, so that won't affect you. But for mortgage or auto loans, FICO counts multiple inquiries during a 30-day period just as one inquiry. Okay, and so the old scoring model, multiple inquiries were counted as one within 14 days. Now they've given you a bit longer, but now that doesn't mean that you can go to 30 different places in 1 month. I don't encourage you to do so. Okay, now there's several ways to begin to rebuild your credit. First and foremost would be applying for a secure card. Okay, with a secure card, you may make a deposit from between $200 to $500, which serves as your credit limit for the next 12 to 18 months. Okay, and so we certainly want you to, again, pay on time, keep your balances low, because every 30 days is going to be your friend as it pertains to rebuilding. Taking out a small installment loan or a secured loan. Okay, and then sometimes, we may recommend that you sign up for one retailer card because they are less strict when it comes to approving for a store card. Just don't overdo it. Just if you shop a lot at Walmart, then go to Walmart. But don't go to Walmart, Target, Kmart, and have 10 of them. Okay. Now, the list of secure cards that we recommend include First Premier, Navy Federal Credit Union, Orchard Bank, Applied Bank, And last but not least, in fact, the one that I recommend the most would be the Fifth Third Bank. Last year, Bloomberg came out with a list of the top 20 banks in the U.S., well, actually in the world. Only 3 were from the U.S., sadly. Chase and Citibank were the other 2, and I'm not huge fans of theirs, with all due respect. But the Fifth Third Bank was the 3rd, and I was really glad to see them on that list, because while they are a commercial bank, they have like a credit union feel. And their secure card is part of their credit builder program. And what's great about it is that it just looks like a regular credit card on your credit report. So if you would like any more information on that secure card, get back with the person that brought you here today, and we will certainly get you that information. Now, the next law that I love to talk about has to do with collection agencies. It's called the Fair Debt Collection Practices Act. This is also governed by the FTC, and these companies are also privately owned, and debt collectors, whether it's a company or an attorney's office, whatever they try to make themselves out to be, the law says that in order for them to be able to legally collect on a debt, they must be able to validate the debt. They must be able to prove to you your contract, your signature, your payment history, what they say this money that you owe is for, who was the original creditor, and what did they charge it off for, and most importantly, are they legally licensed to collect in your state? Okay, and so really, you know, when they call, most people either hang up the phone, don't answer the phone. We want to encourage you to pick a day. You don't have to answer the phone every day, but pick a day to be phone answering day. But we want you to have pen and paper ready, because when they call you, we don't want you to verify your date of birth, your address, your social, because if they really are calling on behalf of quote unquote Capital One, then they really should have this information already. But we want you to also ask them for their company name and their correspondence address and the account number that they have with your name on it, because we're able to help our clients to fight off these third-party debt collectors and to get them to prove that they have a legal right to validate that debt or to collect on it. And if they cannot validate it, they cannot collect. And so certainly I have some people that come to us and they're thinking about filing bankruptcy for debt that's with third-party debt collectors, and we would really like for you to save that cost and that time to do that, and let's just use the law first. So certainly, you know, again, get with the person that brought you here. Let's look over your situation to pick which pathway is going to be best for you. Now, this is something that we are really going to be teaching on this year, and it's really about living debt-free. And I learned a long time ago, what do the poor buy on payday? Well, the poor buy stuff. You know, what is stuff? Stuff is, you know, it's inexpensive things that people buy that they really don't need in order to survive. And where do they get this stuff? Well, you know, hence the growth of the dollar store over the last 20 years. And I'm not knocking Family Dollar or any of them, but you know, dollar stores, garage sales, flea markets, you know, just to name a few. And the problem with buying stuff is that they waste their money on things that they don't need, and they miss on opportunities to make that money work for them. Okay. Second, what do the middle class buy on payday? Well, they just buy more stuff. You know, they are, you know, they're in a society mistakenly that thinks that they're rich, but they're not, because their incomes are dependent on their own efforts, you know, and so they just buy bigger stuff. All right. But the rich and the wealthy, the true wealthy, on payday, they buy things that pay them back. They buy assets, and assets are things that create money for you whether you're working or not. So wealthy people make their assets pay for their expenses and their lifestyle. So this gets back to the basics, budgeting. We have to start budgeting, and a budget is simple. It lists your income, meaning your ins, the money that you make, and your expenses, the outs. the money that you spend. And so all of our clients get our 2012 Financial Empowerment ebook, and this will include a budgeting worksheet. Okay, we have to start budgeting. If the word budget sounds heavy like diet or studying, think of the time that you spend worrying about money or thinking about things that you can't afford to do. This weighs you down. Budgeting is figuring out what you have and what you want and what you need. Okay, and it's about taking charge and setting your own priorities and making choices on this first step on the road to financial empowerment. Okay? Now, let's just take an example. If you have a family that has, a monthly take-home income of $6,000 and critical expenses of $5,400, well, that's $600 left over. Compounded over 72 months, and interest could work for you and against you. So here we would want to make it working for you.